Hello everyone, and welcome to my movie. This is the Devin Savage movie about stocks. I'm calling it Taking the Plunge. Oh, you know what? Perfect. Okay, we're gonna jump right into this, but I have a disclaimer that I have to read first, so I don't get in trouble for this movie or get banned from the internet. So, first, I am not a financial advisor or a teacher, and this is not financial advice. I might teach you something though in this video. And on that note, um, I'm going to get into what some of this stuff is, but there's a word on the street is if you were to buy a stock like GameStop or AMC on Fidelity, for example, a brokerage, and you link your bank account to it, and then once it settles in your Fidelity account, you direct register them with ComputerShare and the direct registration program, DRS. That will be a good idea for you in your future. We'll get into like some of the related stuff why, but there's more stocks than that. It's just these two are like strongly representative. So there's a lot of complicated topics that plug into this. So I'm gonna try and like dumb it down and connect them. Uh, there's like a good learning curve that goes into some of this, but I'm gonna try and keep it very simple for everybody watching. So this is gonna be for all levels. If you know about some of this stuff, I'll still probably teach you something. If you don't know anything about it, I'm gonna try and plug it together the best way where it's understandable. And with that being said, this information is like for people who are interested in that kind of stuff. Maybe they lived uh, a life where they end up getting into stocks or want to make improvements on their life. This is the video for them. So if you're a billionaire, this video is not for you, and you should leave the room. But moving forward, okay. So a warning: I'm passionate. So if I get like excited reading this stuff, uh, that's what it is. And I won't elaborate more on that. I'm gonna move as fast as I can through a lot of topics. Um, okay, so who I am, real quick. Just I'm a musician. That's what's important, and I did go to school, and I got a business degree at Bauer School of Business at the University of Houston, and so I know a little bit about this stuff. I go by user savage underscore d on Reddit, uh, and that's important for when I'll show you a couple things that are related to that later here. Uh, but otherwise, I just mostly use this YouTube for putting up music content or videos, but this is going to be something a little different. It's like a one-time thing. Just I've been getting a lot of questions because I've been involved in this stuff lately, so I figured I would explain it here. Um, there's more to me, but that's like what's important in this video. It's like I'm a regular guy, and a lot of this stuff's super important and applies to everyone, even if you don't know it. So it's I just thought I would talk about it. We can hit a conversation in the comments after the video. And I might be posting this in a couple parts depending on how long it is, but we're just gonna go straight through it. Okay, so just lastly, before I jump in, uh, all right, runner-up movie names. I was asking people, QAnon for Business Bros, and Stocks the New Frontier. So that's like kind of general ideas of what we're gonna be getting into. Lastly, also I want to appreciate and say thank you to everyone on Reddit who was commenting on the map. So I can start to show you this stuff. So I made this map. Oh, here's the whole map. And we're going to get into some details on this, but I'm going to be covering this as the movie as we're walking through it. So a lot of this stuff will make sense. You can pause that and go back if you want to look at it whole. Also, I'm going to include a link under on the video descriptions to this so you can open it and follow along with the movie. Or also, you could just listen along, but it is interactive where you could follow along with this if you would like. But I'm going to be showing you what's important through this thing. And this tab, I have a few other important things to show you. Let me make sure I didn't miss anything in my disclaimer. Okay, so I do have a couple things. I'll do that at the end here. Let me just explain a couple of these links. Perfect. So, some of these links are my sources. Sorry if I'm going in and out of the microphone here. So, LinkedIn, I have about 830 contacts right here. That has been a good source for me. Someone was asking on Reddit, that's why. So, let's see if I can move this out of the way. No, I can't. Great. Well, we'll figure it out. I'll close these. So, okay, so a couple movies that we should, well, I've already watched them, but I recommend that you watch. So I got about 10 hours of movies here. It's 6 movies. It's just, if you do go watch these, you're going to have a good understanding of how a lot of this works, and you're going to see how I was able to like put some of this stuff together. So, The Truman Show. This is a really awesome movie for this because Jim Carrey's in it, and it's about he's living in like a life set up for him that's fake. He was born in it, and then he's kind of discovering it and trying to escape. But it's a very good movie. It's a little older, 1998. The Big Short. Okay, this is a really good movie because it's got a bunch of good actors in it, and they did a really good job. But it tells a story of what happened in 2008, and it's kind of happening again, but the perspective from this movie was very good. Like, this is the number one movie out of all these I would recommend watching, just because it's like based on a real story. It's a docudrama. 2015 is when the movie came out. Margin Call. This is another good movie. But it's kind of like that last movie I was just recommending, except this one is specifically about like the first 12 hours of that movie. So the first 12 hours of 2008. So this next movie, The Wolf of Wall Street, so this one is a little less informational, but they party a lot in this movie, that's why, but it gives a good insight onto like Wall Street culture. If you combine it with those contexts of the other movies I was recommending, you'll get a really good idea of a lot of the stuff that goes on. Dumb Money. Okay, this one's really good. It's about what happened in GameStop in 2021. But it kind of prefaces that and then goes all the way up until it and stops there. So I think they set it up and they're going to release another one maybe for like the next part of this saga, because it really started in 2021. And that's kind of how now in 2024 I'm here making a video like this, because a lot of things have developed since then, and it's interconnected with like some other really big things that are happening in global events. So we'll cover what's important. Okay, lastly, out of the movies and stuff, The Fall of the Cabal. Okay, this is like 10 parts. This link has it kind of like put all together. And so there's like a lot of conspiracies and stuff in this movie. I don't really want to hear that because conspiracies are conspiracies for a reason. But I'm not gonna like go into it and stuff. But it does talk about like some of the darker stuff about like what happens when governments and companies like work together and grow together long term, and like some of the effects they'll have on a broader society in a lot of different areas. But okay, so if you go through all those, you're going to have a really good preface to what I'm going to get into in this video. So I'm going to still make it where you can understand it, but that will just give you a good foreknowledge. So there's a lot of vocabulary, that's why. But so this is the visualization of money from 2022. So they kind of do one of these every couple of years. They don't have a recent one yet. This is the most recent one. I'm just going to go through and like stop this in a few places just so y'all can like see what's going on. Y'all can pause it if you want. But this is just so you can see like the size of money. On the right side, there's kind of like a timeline and related events too. But you can just see like each little cube right here. Like Going back to the beginning real quick. This is like segments net, so it's valued like almost 4 cubes. Crypto market is valued at 7.5 cubes, and that was in 2021 peak November. I would say it's getting around the same right now with Bitcoin around 70K. We'll get into that too. So you can see about the cubes. So I'll just go back and so y'all can see like the size of the rest of some of these stuff. We got like some of the bigger companies here compared to the rest of the S&P 500. United States and China. Global money supply, and you got like the details over here, broad money, narrow money. Stock markets size. Okay, so they're kind of broken down some of the more popular ones. Other is going to be like all the rest. Global debt. So we got debt that's weighing as much as the market almost here. We got governments, financial sector, and households. So that's all debts. So now we're looking at global real estate, pretty big. Agriculture, commercial real estate. Okay, so this is like global wealth. Wealth tallies 463 trillion. So that number is growing. It's continually growing since inflation. So all of these sectors are growing as the money gets spread. But so we got Europe, China, Asia Pacific, India, Latin America, Africa, derivatives market, notional value of money. So this is like the derivatives market, and then what they add on top of it, because they're trading the same money over and over. So this is like, if all of money is like these amounts, the derivatives and notional value is a lot larger. So that's kind of all I wanted to run through with this source. There's a lot of other good information here. You could look through good visualization of market sectors there, some important valuations. Okay, so that's it for this source. I'm going to link a lot of these at the down below the video so that y'all will be able to access these. Okay. So those were some of the main sources. There's just a couple other things I wanted to talk about real quick before we jump into this. It's recent events. That's why. So how, real quick, just for your information, how a stock enters the stock market is when a company will go to a bank once it makes a certain revenue and but business fundamentals. If they qualify, and then they'll apply to get their company trading on the public market, and if they get approved, then the bank will write a contract with them, and then once the contract is finished, they'll be able to get their company trading publicly, and they'll do an IPO, an initial public offering, and then the stock is trading on the lit stock exchange. So it's just important to know how that develops for some of the stuff that I get into here. So recent events that I really want to cover, it's just in like the last couple days. So it is June 4th, 2024, and I started working on this map about a week ago. That's why I've covered everything from the past up until then, but a couple things happened this week, so I'm going to cover those things real quick so I can jump into the past and plug it into now, and we'll get to where we are current. So I just want to make a couple statements about it's with the Berkshire Hathaway Class A shares and a few other companies. Notably, is Gold, Barrick's Gold Corp. You can see here, and Berkshire. At the same time, they dropped like to zero. So this actually went to like from $741,000 the high of the day down to $185. Here is the high, but the $185 was during a halt for about between 1 and 2 hours. But you can see it here because it was during the lit market and the times. So notably, there was a big volume spike in Berkshire here right at the end of that, but it doesn't show on this graph, but it was about 80 times the regular volume for this company. So I think it was a swaps thing, and we'll get into that too. So you can see gold did the exact same move down to a quarter. So the whole market and Berkshire, also Chipotle, the company Chipotle fast food, which I think is fundamentally overvalued if you compare it to like some other companies similar size with similar revenues. But I'm gonna get into like a lot of specifics. Don't worry about my opinion on a couple of these stocks like that. So this is when Berkshire dropped. It's just perspective, and I want to show you this because this is another graph that I did a DD on, and the market always goes up no matter what, but I think we're looking at like the correction of all time here, and we'll get into why. But as you can see, this move is like unfounded. So it says minus 85% right here, but when this actually dropped to 185, it was a minus 99.97% move, which is just crazy because one of the other things people are linking together is like, oh, Berkshire and AMC are related through some kind of market leverage. And we'll get into that, but it's funny that AMC hit all-time high 3 years ago, and it's almost like a right-to-left inversion of what we're looking at here because it hit a high and then now it's at all-time low. So it went up and then went all the way down, and this one went all the way up and then it went down. But so they corrected Berkshire, but I think that is going to be like connected to like what we're gonna see here. And I'm looking at UBS, and we're gonna get into that too once I get into that map. So another important thing before I jump into this, trading halt history, and I wanted to specifically cover yesterday, June 3rd. And the reason is because we can control F. That's just a quick key that you can use to search a page. So I can search AMC here, and it's going to pull up when it was halted. It was halted at 9:37 a.m. And we're going to look at GameStop. GameStop was halted at 9:31 a.m. And these companies spiked like between 100%, well, between 20 and 100%, but no one really knows because like right when the market opened, it just got halted. And then for like 2 hours, it was crazy because we can search here. Berkshire Hathaway also was halted 20 minutes later at 9:50. And then see if Chipotle is on here. Yeah, Chipotle is on here. Halted at 9:44. Gold. Yeah, gold is on here. So this was just yesterday. I went here and clicked just yesterday's date, but they update this every day. They're updating today's as we speak. The market just closed. It's 4:49 p.m. where I am, but it closes at 3 p.m. here. I'm on Central. But I just wanted to highlight that for you. I'll put links to some of these down below the comments. This is another important thing. So this is... They have all kinds of political donations on here, like out of control PACs is what I'm calling it. But you can see like a lot of big donations if you just come on here yourself, and you can look through them for specific ones you want. But the only reason I wanted to show you this source, yes, the top two are Ken Griffin, top four Ken Griffin. A lot of these are, but so it just importantly, you can look at the dates. He's been doing this. Like that's at least 7 years ago. This was 2 years ago. That was right 4 years ago. But these amounts, $27 million, $25 million, $20 million, 20, 20, 15, 10, 10, 10. Okay, it's so crazy. And not all of them are Ken Griffin. Just this page is his, and he's a bigger one of the people doing this, but there's multiple people doing this. Okay, so this is a visualization I made, and it is about Archegos lead mind at the time, Bill Huang, and just some of the data about the operation he was running. So he multiplied his $1.5 billion by 23. And that happened in such a short period of time. If he was just left unchecked for like 4 years, he would have turned $1 billion into $10 quadrillion. Like it just, money should not be able to do that, and it's indicating some other things. So we're going to get into it. Bill Hwang ended up getting arrested just here when he hit 35 billion after 1 year of times 23. But when big money multiplies that hard, it's impossible to not see it. You can't hide that amount anywhere, like no matter how many airplanes full of cash you fly to wherever. So this one is less a source, but I did want to cover it because of some of this stuff I'm going to talk about in swaps up and coming here. So I'm just going to show you guys an example of how an options calculator works. So for example, if I'm going to buy an AMC call, let's get the price, $4.78 closed today. So say I think it's going to, say that someone's selling options for $1 and I'm going to buy 100 contracts. Actually, let's see if there's see, some of these are cheaper. Let's say I think the price is going to go to $5. So here's the call for $5. It's only 26 cents. Mid call. So I'm going to pay 26 cents each. I'm going to pay $26 for 100 contracts of, okay, so that's for June 7th. I would actually, there's a call wall getting set up for June 21st here. I would probably buy calls on that days if I was going to. They're a little more expensive. But I don't do options. I do like risk management. So I feel safe in shares, and I like to buy shares of companies that I believe in. But I wanted to show you how options work. So let's leave this one. Let's say you're going to buy those, spend $60 for 100 contracts of $5 AMC. And so what we can do here is say we can set a range. So we'll set 450. That way if it goes down, we can see what happens. And we'll set $8. And that's it. Calculate. So it's going to bring up this graph here. So if the price lands anywhere here from 5 to 450 in this time period, this is like now, and this is like next week, and this is the following week, and this would be June 21st, since it's about 3 weeks. So you can like, timeline would be here on the bottom, and then the price on the side here. So if it goes over $5, say it like spikes up and comes back down just this week, your call would temporarily be worth like this much money if it goes to 660. But like, okay, so let's talk about like last or 3 years ago when the price went up to like $75 because it was similar. So this is crazy. Oh, you know what? Hold on, I accidentally. Oh no, that is the right place to change it. I'll just change it here too. That way I can 75. Update range. So now, if you bought that $5 call, there's a lot of room for you to lose money here in this red. So like red compared to green is not super accurate, but once you get above $5, it's all green, and you can see the scale of green. So you turn your, how much did you pay? You paid $60. If the stock price, say on day 3, goes up to $75 again, your $60 maxes out. It turns to 11.6K. It can't even go higher on this thing, and they're all maxed. So it doesn't matter when during that time it hits $75. If it goes high, like your call options get times this much percent, or it's going to be more percent than that because it just kind of maxes out on this calculator because market makers don't like to pay out that much. But like I think they're going to shut down market options, or they're going to have to like, okay, MOA scenario, right? Like everyone's talking about the price of GameStop to $1 million, theoretically. I don't think it's going to go that high, but there's certain behaviors we can predict. And so like if it goes straight up to $1 million, like I don't even think this calculator goes that high. So like let's try and just see what happens here. It's going to just say like 999. Oh, like 240. It's like that's the highest option contract that's available for sale right now. But you can see that one will just turn $60 into $37,000. So yeah, if you put like 1 million, your calls are going to turn into just like billions, trillions. So like it's going to break. And this is just options pricing. So it's not going to reflect like that was just the long call, simple long call calculator. But if you do look here, I might have to back a couple. Yeah, here. There's a multitude of available options that are just uh, on this calculator, but you can see that it varies. I just did the long call calculator. That's a little insight into options. Okay, so, oh yes, sources. I just wanted to show you. These are down right here on the left side. Some of the communities that I'm in. So like that's a video game community, but so like some of these stock communities, this is where I get a lot of my info, and it's not like news operations. It's that post any of this stuff. It's just like regular people go in these forums and their communities. So like a lot of people post. Like if I just go, for example, I won't do one of the controversial ones just so I don't get like banned or anything. But if I go to like they did the math, there's 1.5 million members in this community, and they all are like about math. So like each one of these communities, I could find insight about specifics there. But I'm gonna use my profile for a little bit of navigating while we're doing this stuff. But I think that's it for that. What is this? I don't think we need that resume. Yeah, just my LinkedIn followers, and then like the that Reddit list right there of communities. That's where I get a lot of this information. And okay, so back to the Berkshire drop and gold. I was kind of explaining it because I had it pulled up, but so the media is trying to like point this at DFV or Roaring Kitty, Keith Gill, whatever you want to call him. It's that their building's on fire, and this is like their final fit, and I think it might like go through the election based on like what kind of develops. But we're going to talk about like this map here. Just E-Trade's threatening to kick them off. That's E-Trade's like biggest publicity they ever got right now. So I'm not gonna like go into it that much, but it's like a smoke and mirror thing, similar to like how the nature of Berkshire and AMC possible any kind of relations, but then the media would highlight it as just like a glitch and a market correction. It's just there's a lot of psyop going on, but that's pretty much for like the recent events I just wanted to talk about. I have covered all my sources. Just one other source, like the news. So I call them propagandas. Just I don't take those sources to heart, but I'll like view like what's posted and stuff just so I know the narrative and so I don't like miss some details if something important does slip through. Um, and then someone pointed out an ironic phrase that Donald Trump's the best is yet to come, and then now he's facing criminal charges and going to prison. It's just super ironic. And then the current incumbent doesn't face any charges, but it's like, what kind of precedent does that set if, say, a new president wins, or even if the current one gets 4 more years, or even if Trump does take it back? It's like, what kind of precedent does that set for like the next president after he's president? It just, do they think that far ahead? I don't. It doesn't make any sense to me, but I thought it was ironic. I wanted to point it out, but I do point out because I think this is it. The best yet to come. I think that was like a financial metaphor. Uh, but that's it for my little prologue here. We are going to get into this map now. So, without further ado, okay. I'm going to start with the macro meme stock section over here. Zoom out a little bit. Okay, so definitely ignore all of this red for right now. Alright, it looks funky, but class is going to be this box. It just stretched out a couple of these boxes here when I did that. Actually, you know what? It would be better to take this one. That would just make it funky. Okay, perfect. I just don't want you guys to get distracted with it yet because we're going to get over there. So now I could zoom in a little more on this. Um, I'll just do it like that. Perfect. Okay, so macro meme stocks 531.24. Oh, by the way, on the oh sorry, I'm on a the overview here. Okay, yeah, so posts. I'm looking for a specific post. Yes, this one. Um, Macroeconomic Manifesto, DD, Map of Ultimate Happenings. Uh, this is the interactive map for you guys that I'm going to link. Oh, perfect. And we can just leave that here. So, um, macro meme stocks. So the Kings, we were kind of prefacing GameStop and AMC. So GameStop is the King meme stock. I call them the Kings because the media has kind of insinuated that before. But I've got some key players here: Roaring Kitty and Ryan Cohen. Here is a cat. If you'll look at his face, he's very much alive and happy. Some things going on in the company. So Teddy, that is kind of like a super merger company that is only like theoretical at this time, but they're releasing like some books on it. I would recommend you like Google that, like GameStop Teddy books. So Ryan Cohen led this company Chewy to success, and the books kind of like tell a story of that, but in like a weird metaphorical way. But it has like a lot of stuff in this whole map, so I would recommend looking into that. Also, Wu-Tang. There's some hype on this, so like it's like none of this is like fact yet, but it's all like speculative for the positive, and then there's like a lot of or maybe probably to it. So I'm gonna just cover it. Wu-Tang. Basically, the reason of the hype of their association with GameStop is because they're going to release a album, and they're going to release it as an NFT, but specifically one copy that they just released to GameStop, and then GameStop can divide it up into like a million copies or whatever, not copies but pieces, and then distribute it to everybody like a dividend. And I'm talking about the rights to the album. So like every shareholder will just have like part of the rights. So then like a record company picks it up and makes money off of it. Then that rights are with the shareholders of GameStop. So it's like it's a equity seed that it doesn't matter how big it gets. It's just gonna like if you get a part of it, it'll just grow. It's a money tree, like in the metaphorical sense. But so it's pretty exciting. Pokemon cards too. Pokemon is awesome, and like Pokemon toys is the number one selling toys. So Pokemon cards, I don't know if y'all have seen, but like a holographic Charizard is like $2,000. A good graded one. Even a bad one is worth like hundreds of dollars. Like if you like bent it in half. So it's crazy the kind of value these have, and they'll probably just go up because they don't print them anymore, and they just get more rare, and they're printing new ones, and Pokemon's just getting evolved for new generations. It's like it's definitely here to stay, and a lot of anime. So Dragon Ball Z does not have anything to do with GameStop, but like a lot of anime really nowadays just grows off of those bigger ones that were like a long time ago. So the big ones set the standards, and I think we're due for some innovations among some anime. But just long story short, Pokemon cards, GameStop is getting into the industry, and that's what's important. So they're going to be dealing Pokemon cards. They have a large cash position to do it with. I think it was recently right about $2 billion. But this is a company with like no debt. So they do have like a small loan, but it's a French loan. But it's like compared to the amount of money they could just drop it off immediately and just still be rich. But it's more to their advantage to like just finish the time frame that that's on and then like make this money that they have do other stuff. So they're doing Pokemon cards. Also, I put a video game controller. Oh, that reminds me too. They're even like making their own custom controllers and controller parts now. It's like the Radio Shack of old video games. I don't know, it's awesome. It's new and they're creating it in a unique, artistic way with like custom controllers. I even saw a Wu-Tang one. It was cool. Moving forward, I'm not going to spend too much time on a lot of this, but okay, so AMC, very similarly re-innovating. So I put a gorilla here because down where like we are, I put like a little monkey. But to show some scale and scope here. So AMC is working on distribution. Y'all know about the Taylor Swift thing. They're getting a new few artists. I think there's like a Billie Eilish one. There was a Beyonce thing. They're the first one, so it's going to be like more to come as distribution gets bigger. And this is awesome because I don't know if you guys know about like what's happening with Ticketmaster, but Live Nation, LYV, I got like one of their companies right here. So I'll get into why I have these stocks here in a second, but so Ticketmaster's facing like a lot of scrutiny, probably a lot of lawsuits here, massive fees. They're shooting themselves in the foot business-wise long term, and it's coming around. So distribution's there to like be there while that's happening. Also, so the writer's strike that's been affecting AMC, that happened all through last year. We barely put out any movies, still stayed within pretty good fundamentals. And now we have like a good backlog of content to release, and we don't have a writer's strike to deal with anymore. So we're not going to have to deal with like our fundamentals being hammered into the future while this company finishes paying off its debt. And y'all seen companies like GameStop, they just raised $933 million, like $1 billion, like in less than a week last week. And AMC is looking at less than a month to get to financial freedom if something similar happens, and that they've set up a lot of opportunities for that to happen. So Highcroft Mining, that's a mining company that I'll get into a little bit here. Also, AMC is offering credit solutions. I don't know if y'all were paying attention, but they started accepting like cryptos, and then like, say you have a loan with JP Morgan Chase, and you're paying 10% interest on it. Well, you can go refinance that at AMC if you get approved on their credit card, and then now AMC has bought that debt, and then the interest goes to AMC. So you're still paying off your loan, but instead of JP Morgan Chase collecting 10% from you, now you'll probably get refinanced for a better rate with AMC if you qualify, and now you're only paying 7%, but it goes straight to AMC. So it's just an avenue of revenue that not just AMC has, but that they're taking from banks based on the nature of it. So I think GameStop's about to like come public as like a broker dealer or a bank, because it's what their business is turning into. Like they do assets. That's what like all of this is encompassing, and then they're using their cash position to farther develop the assets. So as the US dollar gets weaker. I got movies and popcorn here. They're doing other products too, like candy and stuff, but popcorn. Y'all seen the popcorn buckets? That's like collectible stuff that people are putting on their game shelves and stuff. So I think that's like the pinnacle product they have right now, because movies they're known for. But it's actually AMC Entertainment. They're not a movie theater company. It's just an entertainment company, and that brand could get broader. But within their brand, they have a bunch of branches and smaller stuff going on. So we can see why these two companies are really becoming strong. So Highcroft Mining, I put this in the honorable mention section, which is like this lighter green but not light green section. So I have Highcroft Mining in here. It's associated with AMC. I think it's undervalued specifically compared to like silver, which is like at all-time highs. And I think silver is undervalued based on fundamentals of other market happenings, and we'll get into that. But I put a diamond here and a pick for mining because I think we're sitting on diamonds with this company if you own any shares. If you direct register this company, or even Bed Bath & Beyond, like I own all these, if these go to a different registry than AMC and GameStop, like AMC and GameStop go to ComputerShare, and then these go to like they're managed by other companies once the stocks are transferred, but it's still they're directly registered, which is like a two-factor authentication between brokerages and governments on the record of your stock certificates. So that's why it's so important to register these, because if you don't and you're in like Fidelity, Moo, like I listed some brokerages, we'll get into them, but if there's a market rug pull like what you just saw on Berkshire Hathaway Class A, then in the terms and conditions, all those brokers are like, oh, we just have like a lot of share programs going on and you don't actually own these. So like if shit hits the fan, for lack of better words, it's like there's no protections. So like gonna go to civil court and you're not gonna win. It's like whoever's the biggest lawyers gets like a big chunk of the cheese, but then the lawyers absorb 90% of the whole civil case. It's like it's the disaster that they will continue to run and reset, and unless you're direct registered. That's why there's a big DRS movement, like the Purple Circle flood a lot of those communities on Reddit. It's because that's like the core group, and they know this stuff. So the reason I was talking about that with high crop mining, it's just because AMC bought a bunch of this company. Like they own 22% of the company flat out, and they have certificates to like double down on that, which is like a long call. So if the company's doing good, they can buy in. Like if the company announces they're going to start mining, and this company of all the other mining companies has deeds to like way more land and already no minerals in the ground. It's ridiculous how undervalued this company is. But I'll stop there. You can go look into everything I said. The CEO actually puts up good content on their LinkedIn. I follow them. They're in my contacts. So, BBBY. That one was like delisted after a swap event. So let me actually pull that up here. Oh, what the heck? Oh, I might have accidentally opened this in a incorrect tab. So I was looking for, go to the, yeah, these are some other DDs I posted, but really I kind of put them all together for this one video. Oh, I'm sorry. That's the swap shape that I'm talking about, by the way. That was not the right DD. I'm sorry. I'll pull it up here one sec. It is this one. I need to access this not on old Reddit. There we go. Okay, so I'll cover the swap shape real quick. Just this is Volkswagen in 2008, and you can see it had that shape, and then it spiked. So this is AMC during the reverse stock split, and it did the exact same after spike, but like down. So it's not only inversed like this, but it's also like vertically inverse. So there's like a double inversion, which I think has to do, it's not just like a derivative is like 1 to the power of 2, and that would be a number squared. Well, we're looking at an equation that's like 1 to the power of 3, which would be cubed. But actually, I think the magnitude of like MOAS is going to be like stock price to the like times the power of 7. Like it's because of the market layers. It doesn't just like double the price or like add the price to the price. It's going to like times 10 the price multiple times. And it has to do with magnitude and how a lot of these market mechanics are layered, which I will get into. But we see Citibank, and they did like the most massive stock split anyone's ever seen right in 2009, right after 2008 collapsed. So this 2008 collapsed, and they're doing good, and then they stock split it down, and then this is the new level of the economy, like what was here. It's trading like up, down, bouncing, and trading channel is just here now, but the same channel, and then it continues to go up. So they just split their stock, and then the value keeps going up, but it looks lower. It looks good on the graph. But the problem with that is like this set up a whole nother market layer and then rippled all that money they're taking in a negative way across to everywhere else in the market. So then You can see it, and like, so I drew like a lot of lines on these. I'm not gonna get into those. This is high crop mining, but these are bull flags. This is a double bull flag. This is a bull flag. Just I go into why the flags are certain. This is a bull flag because the point is under an average line. If you draw an average line straight horizontally across this, the point is under it, and you can see how I kind of like this one's right in the middle. This one's above it. This one's below it, and all of these are shaped like this. And this one is, for example, would be like the S&P 500, which I highlight right here. Look at that. And that's what it's propped up. It's fake. And when the correction happens, those are the companies it's going to affect. The ones that are flagged that shape. And this is the VIX. This is the channel I've highlighted. So I don't think the mother of all short squeezes will be like this going to infinity. But I think it might hit the top of this and then just stay at the top of this as volatility is just nuts as they like, because I don't think MOAS will just happen in one day. It's going to be like one bank foreclosure at a time, reflect on the stock price, and then they'll let it trade, and then one more close, and then it'll reflect on the stock price, and then one more. And so it's going to be a process. Like you can see how Tesla ran up. If you go look at when Tesla did run up, it took a while. It was just running up and running up. But yeah, we got GME here like a Super Bowl flag. It's like the exact opposite of the S&P 500 way down here. And then the S&P's 500 corner, when you just line it with the same strategy, it's right there. So I did not mean to click on it. Okay, so housing market, Evergrande. So I ended up getting sidetracked jumping into this. This is why we came here. This is the swap shape. So Ryan Cohen is involved. They do massive swaps, and Ryan leaves because he knows what's going on, and then they blame it on him. So swap shape. We'll get back into that and why I highlighted it here. This shape, because we're seeing it everywhere. And okay, we can go back to here now. BBBY was a prime example of I think it's a big entity going in and doing swaps. So like you saw how Berkshire Hathaway swapped yesterday. Well, when they swap, I don't know if you were looking, but like GameStop and AMC's prices and a few other ones that are tied in the same basket were all flying up and down, and it increased volatility. So the PP show, this guy named Pulte, he is like the lead guy on it. He's like bought in, and he's kind of like the Ryan Cohen of this. I call him grifters, like the people who like just talk about stocks to get famous, who like post YouTube videos every week or whatever. But some of them you can like see their narrative connection after a while, but this guy, I think he just like really loves these companies. So I did include him here. A shout out also to Ian Carroll. He just pretty much is like a blogger, and he will just like read the back of labels and talk about all the stuff in them. But he does it like, and he got real popular because he's like exposing companies and more than companies. I recommend you look him up. He's on like TikTok and Instagram and stuff. Good info there. And then Icon. Okay, so there's like a photo up with Ryan Cohen and this guy, and it has to do with this SPAC merger. So Bed Bath & Beyond, when you see this, like, when it just dives into the ground here, that's because they probably, like, swap leverage this thing down to zero and install a CEO. Actually, with this particular one, I think they couldn't install CEO, and then the CEO commits suicide. Like, it was freaking crazy. And then it's just still unanswered for. And then, like, BBBY censored on the internet. So I put FOMO here because, like, that's the media story that they use to talk about this. But it was more than that. But that is, like, a fear of missing out. That's what FOMO means. And it's a market mechanic that plays a lot into short squeezes. Because once people know all this stuff's happening, we don't want to miss the opportunity. So then they call that FOMO because, like, I'm more likely to buy now because I know things. But that's just It's not a market mechanic, but it's like it's there. So if you're going to do market mechanics, consider that. It's like unmeasurable too. It's like population statistics. You can like get close, but there's like room for error and volatility the whole time. Because it comes down to like individuals' choices and stuff, and you can't like. There's 8 billion people. There's no way you can accurately calculate everyone's choice. But you could get like a good idea, like if more people would lean one way or not. But it's like that's how like election statistics work too, polling and whatnot. That I can draw some similarities between market math and election math and population math too, but we won't get into that because then y'all are just gonna think I'm a conspiracist. But I'm trying to present all this information without getting too deep into like political sides or money values and stuff like that. I'm trying to just keep it like market in its state. Lastly, with the Bed Bath & Beyond, Lego. So Lego, they keep posting like Teddy images. If you go look at those Teddy books, it's like kid images, or like they'll build a Lego of a cat or like a butterfly. They're putting butterflies over this stuff, and it's because it's part of this SPAC merger. People think this company Teddy Butterfly is going to come as like GameStop buys out Bed Bath & Beyond and grows into a bank. And there's a lot of different avenues GameStop could take to successfully navigate that, and I think they're going to take the best one. It's awesome. They're taking their time. They're doing it right. They're letting banks like cripple their own positions before they even like step forward one move, and it makes the banks like cripple their positions even harder just to keep lying about what's going on. And that's fine. We'll get into some more details about that, but I want to like just run down the list here, and just so you guys notice, some of these like the colored words here, I have them all colored and stuff for a reason. It's because I link them to over here like different so I have like alphabet organizations, key collapses, key bubbles, risk leverages. So I'm going to be linking them all together and describing them. I have credit highlighted in purple because it's a bubble, the credit loans bubble, which I'll get into bubbles on its own here in the future, but later in this movie. MMAT though, they're reissuing the stock as like next bridge hydrocarbons. There's a few mechanics specific to that, but it's notable, so I included it here in the honorable mentions. MMTLP. This one just got U3 halted, kind of like Berkshire did yesterday, but then after the halt, it just disappeared and no one's ever heard of it again. So like, it's just gone, and this happened like over a year ago, and everyone who bought these shares is just like, what the heck? Because we're just like stuck out here with nothing. Now we can't sell them, we can't trade them, like we can't even look at them, we can't, and we spent money on them. Anyway, honorable mention, MMTLP. Weed stocks. So Sundial, Weed, Tilray. There's a marijuana bubble, and I'll get into that too, but it has to do with control and prohibition. So I put a beer emoji. There's one again later. We'll cover some of that. So the big 7. So let's see if I can remember these. NVIDIA, Google, Apple, Microsoft, Tesla, Facebook, and there's another one. You know what? I'm so sorry, I forgot it. Magnificent 7. See what they are. Does it just list them here? Yeah, Amazon. Amazon's the one I forgot. So the big 7 is part of swaps. So this C swaps. All of these companies right here in green. So Schwab. There's more to Schwab. I'll get into that later. But all of these stocks in this whole box right here, all the way to here. So, well, and these ones, and even GameStop and AMC. I've included these because I've identified them as either they are all involved in either swaps, rollover obligations, or stock splits. And so these layers sit on top of each other in the market, the stock splits and the swap rollovers. So that's 2 different of those derivatives I'm talking about. So if you fix both, it'll times 10 times 10. so, to clear 2 layers of this fraud, and there's more layers of fraud. So like, but I'm trying to show you how these are interconnected. So all of these are involved in swaps. So you'll look at like when GameStop goes down, pretty much like all of these go up. And so here we got like top 10 meme stocks from 2021. Aside from a few companies like FFIE, that's like a meme stock from this week because it just spiked like 8,000% last week. And it's like a company no one's ever heard of. Like some guy was telling me like, oh, you're so silly for being in GameStop and AMC. And I bought this FFIE and it went up like 1,000%. And it's like, I do look silly temporarily, but I was like, what is that company? And then they don't even know what it is. And then it crashed already. So it's like, well, wow, who would have saw that? It's like maybe a day trader could have made some money, but I'm not a day trader. So other companies in here, Reddit, Robinhood. It's like these companies keep like re-IPOing. Like Reddit just had drama with its awards and then they deleted them all. And then they're like, oh, sorry, we'll put them back. But then they left everyone's awards deleted and then they just make you buy awards now. So it's like, okay, they turned a fun thing gay, but like not like gay like the LGBTQ bubble, which I'll cover later, but like the old meaning when you could just say that. And it wasn't like, oh, you're a hater. Anyway, Hood company like IPO'd as a broker dealer, and then their stock price went up a lot. And they're like complete criminals. I think it's like awaiting a collapse, but they're tied to like too big to fail thing, which I'll get into here. Some more meme stocks. Costs have been funky lately with some of the later stuff going on. Like ARM it's like an NVIDIA substitute. They just parallel each other. It's like to spread their assets so they can't like. They're all in on NVIDIA to make the market go up. Except they're not quite all in, but they'll have like some stocks they can just blow up 10,000% just in case. They were doing this a lot with zombie stocks until people looked into zombie stocks, and they kind of just make up companies like FFIE to do it. But I got Disney in here, Coke, PayPal. Go look up all, like pause it and go look up each one of these stocks. Oh, I have Wish with the little symbol here because they actually changed their name. It's a different 4 letters now, but if you still type Wish, it'll pull it up. But someone in the comments actually mentioned that to me, and I updated it. I've been updating this map for a week or so to get it to where it is here. But I'll have that final one posted on that Reddit link for at the end, so like anyone who's viewing this will have these updates if I updated it here, if we discover anything. But I was very thorough putting this together, so I think I got the whole picture here. Lastly, just like bank stocks, and then like a few brokerage stocks, like Goldman Sachs, JP Morgan. I have Ford in here too. It's just Netflix. These are like narrative companies. They got the streaming narrative going on. Swaps, stock splits. Ford's had 8 stock splits in its past, and that's just like how they'll re-leverage another one of these stocks, and then they'll all just re-leverage each other, and they all own each other until it just like it's eventually going to pop out somewhere. And GameStop basically went and is collecting all the broken pieces and making a company. So when it pops somewhere, it's going to all pop in one place. Right here. Right in this little meme stop section. So it's like these guys know they're the kings. That's why they know what's going on. So Schwab, let me see what color bubble. Oh, that's the derivative metrics bubble and brokerage collusion, binds for current swaps. Okay, so yeah, I'll get into that later. So that's it for that little top section. Just also importantly, before I get into like what's the meat of this movie and what I'm excited to be talking about, we got institutional hierarchies. So you got big banks, government, little banks, businesses, workers, and then like less than workers, like prisoners, homeless people, workers that might have like a lot of debt. I'm talking like 50,000 plus who just like, they do not see the light right now. Man, even 10K, it's hard to see the light right now because like we got some of the derivatives complex and swap bubble going on. We got like mass layoffs and stuff. I'll get into a lot of this per its market leverage and sector here, but that's the breakdown of the institutional hierarchy. Class, I put wealth here. So the rich consist of the 0.01% up in this level. So, and this is like the rich 1%, which like your CEOs and stuff. So once you get to like this level, say you're down here and you make it to here. Well, once you get to this level, you kind of bounce up and down between these three. Like you're just in the safe zone above that level. You made it. You're in the haves group. So this is the have nots group down here. Anyone who, unless you're like the CEO who had like, oh, your profits times 1,000 from COVID and you moved up, you pretty much got moved down because they inflated everything. And even if you got a little raise, you got moved down. So it's like with this whole divide getting huge here, it's not good. It's how previous revolutions have happened, and like 1945 happened in Germany, and there's like a word I can't call it without maybe getting in trouble. But so inside each of these institutional hierarchies, we have international banks are doing like silver certificates. They're managing the derivative complex, and you got like banks and firms at this level. In the government level, they make policy, and there's multiple levels of that. You got federal, city, state, private, like private businesses. Like, for example, like when Twitter got bought, and then now Elon Musk is like up here in this top percent. So he kind of just like runs Twitter however he wants. Like within reason, and then that within reason is just getting smaller and smaller. And that's just indicating some other issues. As far as super billionaires go, I'll say positive about Elon Musk. At least he'll talk about some of this other stuff where maybe other billionaires wouldn't, and it's eye opening because like at least he's like pointing for these three layers right here. Like, hey, if you look at this certain spot, you might find something worth your knowledge, and he's like, I got up here like practicing that. So he just had a hyper awareness about things, and that's how you get where you're going. The market moves like this. Like AMC and GameStop it's a super phenomenon, and of what it is, it's the biggest, baddest potential that's ever existed in a market for a lot of people to know. I talk about some bubbles later with the Tulip Mania a long time ago, but it's like that again, but it takes an understanding of it though to take advantage of it though, because if you could just like miss it if you don't know any of these things are happening. So corporations under governments, I think I'm on sub international banks, so that's going to be like regional banks, hedge fund CEOs. So like Ken Griffin would sit on this level, but he bounces up and down, but he's in a hedge fund, but he said he makes the rules in the market. So it's like, it's these top three layers kind of just work together to make sure it goes their way. And the bottom layers can just suck it up until they figure out how to change it from the top. Because there's nothing they can do down here. That lid is on tight. So businesses, schools, churches, the Fed, they operate at the corporation level. The Fed prints money, and the Fed is in the alphabet organizations group that I'll go over those later. Working class, I just highlighted social structures and taxable income. So I'll refer to this whole table right here, the institutional hierarchy and like class table. But I just want to break it down here at the beginning before I'm jumping back to it. So you're familiar with the organization. So sub-working class, prison, homeless, debt slaves, I covered that. Bad loans kind of like creates this category, mostly debt slaves. Homeless, a lot of that is like military veterans who've had like Social Security type programs, pensions, 401ks, like not good financial products, like rug pulled on them, or like mentally ill people who can't get the help they need. It's like that makes up a large percent of this homeless group, and we need reform there really bad. But like we can't even reform that while we have a housing bubble and rent farms incentivized. So like I'll get into that stuff later too, but it's just like I can't just say, oh, there's a problem, because each one of these problems is like 6 layers deep. So that's why I'll get written off before I start getting paid attention to by like majority of people, because if you think about how dumb the average person is, well, half of them are dumber than that. And I'm not calling out anyone specifically, and you can move from the bottom to the top if you apply yourself. And so I included that here: attitude, character, education, understanding cycles of humanity, repeating good habits. It's like there's ways to beat this, but you gotta use your mind, you gotta use your brain. So underneath that whole hierarchy, there's a back door. There's always a back door, right? Like Berkshire Class A collapsing is like the back door for the S&P 500. Like in the way where the whole thing would have collapsed if that company didn't reposition its swaps immediately pending. They say Keith Gill like posted his position on Reddit and it caused the market to move. But then now the market keeps moving and Keith keeps talking. So what if he just never stops talking? The market never stops moving. It's like the narrative just doesn't line up anymore. And but they're continuing the narrative though. So it's like, how far does that go? So and the reason is like as they politicize everything, right? So that dilution that I'm talking about happens in every market sector, every industry, every business. So like now we got like big government hands and everything, and it should be like government's nowhere except for maybe like a constitution. But now if you get elected, you just make your own rules and print money into your pocket, and then that's been the culture, and it's like derivative layers of the culture now at this point. So I got the allegory of the cave here. If you don't know what that is, look it up. It's like when self-discovery. So, but in a broader sense, not just discovering yourself, but like and your place here, and then like making the best of it. Like someone who would have capitalized a maximum amount on the allegory of the cave would be someone like Michael Jackson or Elvis Presley or Prince, or like they're like larger in life people, or it doesn't have to be music or actors or like entertainment guys, but like in the inverse sense, like Bernie Madoff, who's like the biggest criminal ever for financial fraud, he was self-aware, but like was a narcissist. So it's like that. I get into policy examples and byproducts and stuff like that later, but the Matrix, red and blue pill. That's allegory of the cave. It's like that decision. Like, are you gonna open your mind, or are you going to just keep going to your day job and being happy and never question it? And even if you're not happy, just to kid yourself that you're happy. And it's like, pick a life. You got to pick one. Because you can't do both. Like the guy who's like, I want to take both pills. It's like, well, you can't have an open mind and then go be happy as a slave or whatever. I put freedom here because like I define slavery as if you're stuck in this bottom half, that's slavery. Because think about it, like the top half, if they're born in the top half, they usually get a car and a house, and then like they can just live however they want. But if you're in the bottom half, you probably have to like work for a loan on a house that you'll never pay off. So your life is like defined by that. And so it's like, and we got like 99% of people in this group now, because even if you make 100K a year, houses are like $1 million a year up and coming. Like it's just so bad. And then like that's like with interest. It's like 500K, but 500K for 30 years with interest is like $1 million. It's just, think about how trusts work. And if you get an 8% dividend back on a trust every year and you put $1 million in, you can just retire, because you'll just like, if you get 8% of $1 million annually, that's 80K. And now you just get 80K because you had $1 million in your past. So we got like all these rich people just doing this. So it doesn't leave much money for anyone else. And then those same group are going to be like, we need a minimum wage of $7. And then we need to make sure everyone's just working for $7 and doesn't question it. And so now we have everything I'm about to talk about. Okay, we're almost there. I'm going to get into derivative metrics here real quick. Try and cover this real quick. Spring theory, that's like, you see how they push BBBY down right here? So spring theory suggests like we can measure how much it got pushed down, and then theoretically, based on like if the company survive, it should spring up a certain amount later, like a measurable amount based on like the company fundamentals and like all of these things, and like FOMO and like a couple other things. But Wyckoff, that's like if it's bouncing up and down a certain number of times, you see exact points where it touches, and if they're like skewed a certain direction, you can measure like which way the stock's leaning, and then like magnitude it with the spring theory and TA. So that's just like kind of like putting those together and like doing research and looking at it, all of these um, derivative metrics together. Uh, TA guys get a lot of hate right now because someone will come be like, "Oh, trading volume's high and GameStop's up," but GameStop's not up just because trading volume's high. It's actually up because like 15 of these indicators are volatile at the same time in some way. So like there's always more to it. So the TA guy might be right, trading volume's up and GameStop's up, but then when there's more to it, it's hard to like predict a future immediate move when they have complete control. So they're like, "Oh, that guy said trading volume's up, so we're gonna like uh, buy a bunch of puts and then put this thing on max pain, and then we're gonna like jack up OVB so it looks good, but then they're gonna like liquidate their fake companies like FFIE and like backdoor the opposite narrative so it looks like they're like, so that way the media can say like, oh, we're not shorting GameStop, but that company sucks though." And then, but they're like actually shorting GameStop, but they don't have to call it shorting when they can like make a short with 5 of these other leverage instruments, and then it's technically not a short, but it's like the same nature of a short because they like do that. And then as soon as people would like be like, "Oh, that company is like experiencing fundamental issues," and then when we sell, then they just get off their shorts, and then they have the shares, and then it jacks up to like whatever deadline. They want us to leave before we get in on like AMC and GameStop. That's why the hype is like the whole market were rather shut, and they like one positive thing about those companies. But so magnitude, I already talked about magnitude a little bit. That's like derivative scale because it's like 2 to the power of 1 is 2 times itself. But 2 to the power of 10, which is like 2 times 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 2, that's like a million. So I could do the math, but it's just like that's magnitude scale. It just like, and if you add just 1 more times 2, then it's like twice as big. And then 1 more times 2, and it's twice as big. So you turn 1 million into 2, 4, 8, 16, 32, 64, and it just gets bigger and bigger and bigger. And that's where you get the, why does a graph just go like this? And it's because like it's that magnitude kicking in on an exponential value. So it's called an exponent, like x to the power of 1, x to the power of 2, exponential value. So magnitude. So another derivative metric. So I highlighted those 5. Various trading platforms and terms and conditions. I talked about that with Fidelity a little bit in my intro, but those go hand in hand. We'll pop back to them when necessary. Cookies and data mining also. That has to do with like internet, record keeping, like book burning, like when companies go back and like burn all their books, or like, for example, when Robinhood shut down the market in 2021, they got like 200,000 one-star reviews. And then Google just went and deleted them all. And then they got like 10 5-star reviews, and they're just a 5-star company again. But it's like they're too big to fail, so they're just like allowed to call the government and be like, "Hey, government, I'm being bullied because I lost my own bet. So now I need you to come fix the market for me." So like that's what happened with Robinhood. And Citadel was the one kind of like covering and orchestrating that. You got their balance sheet with billions of purchased or securities owned but not yet purchased. So they're just allowed to claim billions of dollars they have that they never pay for, never own, never will own. But they're just super billionaires though. But it's like the whole market that they're like cutting off access to for people, and then they just like, "Oh, Ken Griffin says it's his because he needs to say it's his because he needs derivative leverage because he's causing all these problems, and he needs derivative leverage to maintain those problems." And it's just, now they're just all getting big. So it's like, if they inflate the economy too big, the GameStop rocket is just going to be able to fly around in it and still take over the whole thing. But if they actually retract the market, GameStop's still going to rocket and pop through the bubble, and then they're going to have to clean up the pop bubble, and it's going to be a disaster whichever way now, because if they inflate the bubble and don't let it pop, sorry, hit my mic, then What does that mean? That means like massive inflation. It's inflating the bubble of the market. And yes, that means they're going to print so much money that the economy gets bigger, and then you're going to be paying the inflation rate on everything for however long. And the price has already like doubled on everything. They say 3% inflation. We'll tell that to the house that was $15,000 30 years ago, and now it's $1,000,000. That's not 3%. Not even compounded. No, that is complete fraud. They're rescaling this thing over and over to 3%. So, like, if it's not 3%, they scale it so it is 3%, and then they say it's 3% when it's not. And they're using a lot of these derivative metrics to just fudge the numbers. So they're like, oh, if so-and-so problem is 8 big, well, a derivative down of that is 4, and a derivative down of that is 2. So reported is 2 to the power of 3. And now it doesn't look so big like 8. And so, like, they got, like, every market mechanic reported this way now. So there's, like, fractional reporting, fractional reserves. It's just so many layers that they never have to tell the truth. They never will. And, okay, I'll move forward. We'll get back to that in a second. CAT system. That's its own thing here. I put the rock emoji there because it's called the Consolidated Audit Trail. So now whether I'm crazy or these guys are telling the truth, or these guys are lying, or if I'm actually sane and just oppressed by some of these things and willing to talk about it, the Consolidated Audit Trail is going to keep track of everything. So, like, whatever's continuing to go on, so if I'm crazy, it's about to be exposed, or if they're lying, it's about to be exposed, and then I'm ready because, like, I'm tired of being crazy about talking about stuff like this. That's why I'm making this movie, by the way, because, like, everyone's hitting me up because I talk about this stuff, so they know I'm kind of involved. So now that they're, like, more aware, they're like, hey, what's happening? And I'm tired of explaining this over and over, so now I'm just going to give them the link. But okay, so the underlying narrative is MOAS, mother of all short squeezes. We got the moon there because that's where the rocket's going. And buy and hold, no sell, no sell. Those are just like slogans. Buy and hold because that's what we're doing. No sell, because that's what we're going to do. Because, for example, someone like Ken Griffin lied under oath, and it's okay for him to do it. Just kidding, that was sarcasm. It's not okay for him to do it. We are not selling these stocks until he goes to jail because he is setting the price of these as a proven liar, criminal. So I'm not going to play for that team. That's the bottom line. That's where this phrase came from. And yes, that does mean that the shares of GameStop are just going to keep going up while he is not in jail. So maybe they'll both happen at the same time. We might see like pardons, revolutions, riots, etc. I'm not exciting a single one of those things, but this is what happens when this stuff happens, and why these phrases. And dude, we had like BLM riots all summer, and then you can't even call those riots because like democratization addiction. But like January 6th was a riot though, and it was just a big gathering of people, and then they're gonna like one little incident go off and 6 people out of 1 million people, that's statistically like 0.00001%. And it's just like the biggest, most horrid riot ever assembled. Don't even talk about it. Don't question it. We're going to search everyone for years and years to come and not focus on future problems. Like, while we're just like flying airplanes that cash other countries. We got like a lot of this other stuff I'm going to get into. So it's just like, all right, we see the liars now and we don't like it. So position close versus covering. It's one of those big lies. I have this symbol here because I put it somewhere else, and it's the same thing, but we'll get into this more and more as we go. Okay, so lastly, I'm going to just talk about what each one of these is real quick, so like we can break them down. So trading volume, that is how much volume of the stock is traded per day. So if 100 shares are sold and 50 are bought, the volume would be 50 because 50 of them being sold were bought, and there's still 50 orders, but they were not filled. So the volume was 50 because 50 shares have exchanged hands. FTD volume, that's the volume of shares failed to deliver. So when trading volume's 300 million and FTD volume's like 100 million, that means 100 million is supposed to be trading volume, and they couldn't deliver it. And then that's just common now. It's like in a market, supply equals demand. If 100 shares are issued, there are 100 shares. But now, if 100 shares are issued and all 100 trade and none of them are delivered, that means there's 0 shares. Where are the 100 shares? And how were more than 100 traded? And then the FTD volume is a fractional percentage of it. We can highlight some of the problems just looking at those two statistics, but let's keep going. Supply and demand. Okay, so we know what that is. I'm not going to talk about that, but it is a derivative metric. Short interest. That is where how much, if they take a short position, it's the premium that they're paying to maintain the short position. So if they bet against a company that's probably going bankrupt, they probably get cheap premiums because everyone knows it's going bankrupt. So it's good to short. And the company's probably not doing good and bad management. So it's that's when a company would be rightfully shorted to the ground. Or if a company is putting out toys that harm kids, we should short that one to the ground because it's that company's not doing safety procedures, that a number of things can happen there. I'm just talking about public view of the business and why someone was short, but a lot of the later problems is because what's happening is bigger institutions are targeting good companies and then just planting a CEO and shorting it, and it's predatory finance, and we'll get into the differences and stuff in a little bit. But so lending, that's if I buy a GameStop share and then I just let you borrow it, and then I charge you 7% per period, per month, week, however long we agree on a contract to just hold it. And then say you hold it for 1 month, you pay me 7%. You might have shorted or use it as leverage to short something, buy something. You could do a lot of stuff with it in the market, but at the end of the lending period, you can either re-lend it or I can get it back. Or so that's lending. That works in even baskets. They'll combine a bunch of securities in one ETF and then they'll lend those. So it's there's a lot going on, multi-layers of each one of these. Level 5 clearance, 1 through 5. So if you get approved, Fidelity, I'll use this as an example. There's level 1, 2, 3, 4, 5 trading. So pretty much when you make an account, you're a level 1 trader. And then if you apply and qualify, if you can prove income and have 10 grand in your account, they'll probably approve you. But it's at their discretion. So I actually made a good amount of money in 2021 and then got denied approval, which is crazy because then I had my friend who didn't know what they were doing get approved. And then, so I went over to a different brokerage and pretended I didn't know what I'm doing, and they approved me. So it's just so weird. I ended up getting approved on TradeStation. But, I proved good data to Fidelity, and they denied me. And then TradeStation, I proved bad data, and then they got me. So it shows a lot of what kind of people they're trying to get on their platform. And they don't want people who know what they're doing. Let's just say that. And so they'll only approve, those kind of people for, it used to be different. If you've been approved for a while, this is just since COVID. It's they just figure oh, no rules. We're going to bend this to our favor as much as we can, and until it's not even the same company anymore. But so level 2 through 5s, remember when I showed you that options calculator earlier? It's just all of those would be levels 1, 2, 3, 4, and 5, or 2, 3, 4, 5. 1 is no options, just shares. And then I think you get approved for penny stocks in level 1, but it's an additional application because that's over the counter markets versus the lit trading public market. They have them separated so they can move stocks to the over the counter market and have different rules apply if they need to maintain control. Anyway, we're gonna dive into that too, but level 2 through 5 clearance is different levels of options, but you pretty much only need level 1 and 2, because level 2 would let you get calls and puts and contracts and options, but then levels 3 through 5 is going to be writing your own calls and puts and stuff. And what's crazy is once you get up there, you can write naked calls and options and stuff, and naked options makes a little more sense than naked shares, but which was a myth until lately. It was more than a myth, but the media claimed it was only a myth until more lately. Now it's there's specific examples of naked shorting that are legal if you're a market maker, but it's just more and more the leaning in your favor until it's not the same company, until like, oh, the market maker is a market maker, until it's not. It's just like a fucking predatory company eating machine that people invest in, so I end up taking all their money. And then that's why I know everyone talk dogs on the market today, and they're like, oh, it's gamified, it's rigged. Well, it is. And it shouldn't be, but even if it's going to maintain to do so, there's like a good limitation of they should like let it correct periodically instead of they let it just go forever without correcting. That's the problem. And so that way, if you got fraud happening after 6 months, we'll like weed it out, and then the fines will be like 6 months of prorated crime, and we should drop the hammer on them, and then that's it. But instead, we let 50 years of crime, and now it's just fines for crimes. So it's like, dude, it's a super disaster now. Like, we not only didn't approach it the right way, but we continue to do it wrong and then like turn a blind eye to it. So OBV, on balance volume, that's like their recorded volume versus like legal volume. So AMC has issued 300 million outstanding shares, and for example, I think they've actually like sold a little less than that because they still have a little bit, but that they could sell, but they already have approved. Then like, but it would be best for AMC to sell them when like the stock goes up. But lately they've been hitting it down, so like that it's a give and take battle that's been going on. But on balance volume, they'll have like 3 billion shares. So it represents like the notional amount with like contracts, but now they must be writing so many naked contracts, and now you see like DFE set up a call wall. That's what he's doing on June 21st. And there's more contracts than even should exist, which are redeemable for like more shares than even exist. Like it's about to get really messy. And they're going to say that it's market manipulation because he bought calls. But they set that up for him. They're like, this is how you do the market. Only do it this way so we can take advantage of you. And then he did it, but he just bought like their Achilles heel one. And then they're like, oh no, you can't do that. But no, like it's too late. You made the market. This is how it works. So now they're making all their own rules, but it's like it's already like a dog off the leash. We're gonna continue. So utilization. That's how many it goes with share lending. Like if say 300 million shares exist and 100 million of them are lent. So that would be a lot of them lent. If a third of the float is lent out, that'd be 33%. But say 33% is lent out, but only out of 100 million, only 33 of those, well, a third of a third, so 1/9 total, but a third of the 3% would be lent out. So that third of a third, the 1/9% of the whole float, which would be like 11%, that would be like the percent of the float utilized, and then the 33% is utilization of available shares. So we saw GameStop and AMC have max utilization for a while. So that means if there's 300 million to borrow, they're all borrowed and lent out, and it just stuck up top. So like, and so it fell lately, but then OBV spikes. So you see where they're just gonna like pick 3 of these and teeter-totter them at any given moment. Oops. Undo that. They're going to just teeter-totter these at any given moment. And the market mechanics work in a way where they can almost pick like any 3. And it's like 999 ways they can mess with it. And add one more. Now it's 9,999 ways they can mess with it. And so now they're adding like 6, 7, 8 of these into like every... So I can break these down into algorithm chunks. And that's how they'll put them together. So like... And they only work together in certain ways. So if you algorithm chunk each one of these out... and that's where we're starting to see their limits, because say DFE bought calls, and so that will like make it where, okay, the calls broke utilization, so they can't use utilization anymore to rig it, but they still have the other ones, and he's just breaking these one at a time. That's why it's like, soon, if they don't start like gammaing this thing up, it's literally just gonna mow ass in one day and rip their face off, and so it's like they're trying to control it, and I think they will. But that's the game. And okay, moving forward, MACD. All I want to say about that's just if you are watching like monthly moving average, daily moving average, weekly moving averages, like there's certain setups of that are key. So we got like golden crosses lately, and that's where like the monthly moving average will cross the daily. That means the price moves so volatile so quick. Your average for 200 months or like the daily, if it's under, it'll just cross it because like if your average is $1 for a whole year, but then it's $10 one day, the daily gonna spike up to 10, but the month not gonna move very much. But 10's so much more than one, it will start significantly moving the monthly average if it stays at 10. But it's like if it's just for one day, it might blip a little on the monthly, but it's when averages cross, that will pull it up even more. So when the daily crosses like weekly and monthly, it means there's so much demand momentum up that happened. And same way, if it crossed down, I would sell it that way because like it's probably about to tank. I would take a short position then, and usually fundamentally, if a company's doing bad, making bad reports, running their company bad, firing everybody, a mean boss, making bad supply chain decisions in their company, that's when a company would start to make that kind of a fundamental graph where people see it and be like, oh, what's going on in that company? It's bad, and then it is bad because it's represented on the graph, and then, but now just the graphs are completely disconnected from anything that happens. And then the news is disconnected from anything that happens, and it's just multi-layers of like nobody knows what's going on unless they are hyper aware. You got to like be vigilant and putting this together. So max pain, that has to do with calls and puts, and it's the exact value where say that the stock price is $4.50 and you bought the $5 call, but there's someone who bought $4 put. Say it's just 1-to-1. So max pain will be at $4.50 because if it lands at $4.50, it's max pain because the guy who shorted it, it hurts him because it didn't go down like he thought, and then it hurts the guy who bought the call because he thought it was going to go up and it didn't. So like he lost money too. So both people lose money on max pain, and generally you can make money if it lands at max pain, but if you call it or short it to that exact price, but like it's so specific that like only market makers kind of like know where it's going, so they're able to like very accurately pin it or using some of these other TA metrics. But that's what max pain is. Risk, that's kind of like FOMO. It's just you'll measure risk with all of these things, but it's also prominent at all time and like part of FOMO. So like it's like you're going to want to keep risk in the back of your mind as like you're evaluating any of these, because like as soon as like if you're buying stock in a company and managing your investment and then you see something scary happen, like you're going to want to know about it probably. And that's another pitfall. Like a lot of the older generations, I'm not going to like boomer, Gen X, millennials this, because like if you're old and poor and young and poor, it sucks for both of us. And if we've got it made, whatever, it's good for both of us. It's like really rich versus poor. It's not like but like generally it was different just 30 years ago. So like a lot of that group would like, oh, go to a stockbroker, they invest for me, I trust it. But now, do no young guys do that? Because it's like, dude, we don't trust that, and we know about what's going on with this, like the meme stock bubble. So that's gonna flip hard, and it sucks because a lot of the behind mine, like they're not aware of some of this stuff because they're maybe like about to retire or like, and that sucks because they got a lot of stuff at risk, which we'll get into later. But it just with the generational thing, it's like we gotta fix the poor. Like it's this middle class scale of class thing. Like that the middle class is gone and there's the haves and have nots. That's the issue, not any like generational divide. But that there are different behaviors that each generation exhibits. That's all I'm trying to like highlight, and we'll get into like why some of those play factors later, because it's like that's why maybe like a boomer would be like, oh, lazy millennial, as this stereotype goes, because like when they're 30 they bought a house, a car, a job, had a family, and they're all right. But now you can work like 4 jobs and you can't even buy one of those things. But like the boomer who's about to retire didn't see that happen. They're just like about to retire. It's like the grass is green in their backyard, and like this is how Germany turned into Germany in 1945. But it's like you can't tell them that because they're just the grass is green in their backyard and they're about to retire. So, but Now we got like the policy kind of like cut them off because they're gonna, oh, let's extend retirement age, let's like make houses a little more expensive and make the loans a little longer. I saw some 100-year mortgages. That is renting. Like, I don't care who you are, 100-year mortgage. Are you kidding me? But they just want to inflate the economy and then sell you that as like coping. It is so nuts to me. But let's continue. IPOs, initial public offerings, we talked about that. It's when the stock, the first second it hits the market, like the first day. So like a lot of times now you'll just see it get shorted in the ground immediately. But that's what an IPO is. Sometimes they do okay. Like if you're on the narrative one, like Robinhood's IPO is like considered a success right now because the company's like doing good, but it's like completely propped up by a backdoor system that I'll talk about. But dilutions. So that's kind of like stock splits, or like even if a company has approved shares that they didn't sell yet, then they sell those. They're like diluting the stock, and it could be good or bad. I generally think that it's good, period, because if a stock is diluted, there's probably an underlying reason. So you have to have faith in your CEO. If it's diluted during a bad time, you got to look at if it was like a planted CEO or not, and based on like, does the company's mission make sense? Are they on track with their goals? Do their numbers look good? If they don't look good, where do they not look good and why? And like, there's just a lot of questions you should ask. I kind of cover stock splits a little bit, but I can cover them together. Just like there's a couple different mechanisms they can do. So a forward stock split or like a reverse stock split. So a forward stock split is where they like dilute forward. So they dump a bunch more shares on the already owners. So it dilutes the shares they have. But a reverse stock split or like a buyback would like take shares out of the market. So then the people who still have some have more percent of the company. So like, for example, I can do a number example. So if you have 100 shares and then they dilute it to 1,000, you just got diluted 90%. So that sucks. Your 10 shares turned into 100, but they should be worth the same value. So it's okay. But like, since they're a little easier to trade, since there's more of them, you might lose a little value. But the other way, if it goes up and then there's less shares, so your 100 shares turned to 10, now those 10 shares are worth a lot more. And they'll probably go up a little more because they're like way less. So the people who do want them, it's a little harder to get. And so that's why AMC's reverse stock split was so crazy, because when the company, it was a reverse stock split. So the price should have like went up times 10. So it should have went from 40 to 400 without even moving. It's just the channel change per the dynamics of a stock split or reverse stock split. So then when that happened and the price went down 10 times, it wasn't just like it stayed the same. It went down 10 times. So that's two layers, because it should have went up 10 times. So it's 10, 10. So like it went from 40 to 4 instead of 40 to 400. And they're going to pay for that later, because it's like they're paying premiums on holding that swapped right now. And then they swap it back, and then they're swapping, and they're stacking up premiums. And so now the Fed had to just print a bunch of money to pay for that, and they had a program because we're supposed to sell by now, but it didn't happen like they thought, and now they're about to print a bunch more money. Or so you see Berkshire A's reorganization of collateral while a call wall is being set up on June 21st. Like, I'm talking very specific, and I'm trying to generalize this for like a movie that'll last your time a little longer, but what's happening right now is so important. And so we'll move forward a little bit. Dilutions, buybacks, licensing. Okay, so licensing is kind of like terms and conditions. It's like a business leverage. It's a tax. So like, oh, you want to run a business? You got to get a license. And there's that much more to this that your lower half would have to go through to get to the top half. So I'm pro like business licensing. Like, you should be like qualified for what you do, but like I think trade schools are great. School's great. College is overpriced right now, and that's a different bubble we'll get into, but it's education is so important. It's one of my key things right here in the what people would plug into their scale of class in the hierarchy. So liquidations, that's like almost what happened to Berkshire yesterday, when they just like the bank will come in and be like, oh, all the shares that you've approved for your contract to trade, well, like your whole company's bankrupt unless you can post collateral. We're going to take it all now because your performance is so bad. We don't trust you're going to make it back, and you're going to ruin the rest of this money. So we're going to take it and fix what we can because you're not. So that's what a liquidation is. So Berkshire pretty much should have got liquidated, but like they're too big to fall. So whatever backdoor thing's going on, they're just like allowed to swap this again. But you saw everyone's talking about the price went down to $185, and yes, it did, and that was crazy. But it also was 630K, and it went up to 740K. So they got 15% leverage on their company. And when you're talking about a company valued at $1 trillion, so 15%, that's $150 billion of leverage up. Yes, he lost $1 trillion for an hour. But then as soon as it swapped back, he was able to gain $150 billion on top of his restored $1 trillion leverage. So he gained from that. Like, it's just so nuts. And he didn't gain. That's probably the premium amount to just keep his swap position held. It's that big. It's so big, the swap position. And we're going to get into that, how these bullet swaps and cycles and like other kinds of swap. I outline all the swaps later when we talk to them, but it's hard to like remember on the spot. But they're all together. They're coming together here because the time cycles eventually line up. And bonuses. So bonus incentives, there's multiple layers of bonuses companies can do within their companies. There could be like bonuses for crime we don't even know about. There's a lot. It's one of the incentives that would go into this because, like, even for example, if GameStop wrote policy like next year and it got approved somehow, like voted on, then and it was like they put a clause in there like, oh well, our CEO gets a $500 million bonus if it's approved. That $500 million comes out of the company, and then it like affects the fundamentals of that company. Now that company doesn't have $500 million. So like, yes, the CEO does, but the company doesn't. And that's what people are evaluating and buying a company for. So bonuses, stock splits we covered, and we'll cover more. Means, I just mean like averages and like sine waves. Oh yeah, I was going to show you that. So I can just find a blank paper. Okay, so a sine wave, real quick. It's like, okay, let me show you. If you have a wave going like this, a sine wave is like a specific, like if you make this right in the middle, it's going to have like peaks and troughs, mathematically measurably apart. So sine waves, you learn about that in geometry, like tangent, cosine, and sine. Well, it's a sine wave. So like, yeah, it does measurements of a triangle, but if you put a triangle on a 2D plane or a 3D plane, and then it would turn into a cone, you're going to be able to measure points on the graph, and so you need to be able to visualize that 2D plane into a 3D plane, X, Y, and Z axis, because once we get into the derivatives, that's what it is. So y equals x is like a line. Y equals x squared is a slope, but then on y equals x squared is the parallel, but if you square the x, you add another layer, and that's what would turn a square into a cube. So then that is what, and then to the power of 4 on that cube, you're going to get into beyond the 3D universe, which is like mathematically possible, but not physically possible in the current like physical limits here. But it just, you need to be able to visualize that 3D plane, because then what you can imagine the stock graph trading like a y equals x flat, but then if you look at it 3D, it's actually rotating like a engine crank, like a transmission crank, like the shaft, which has multiple parts, and it spins around super fast, and it's got all these parts that like roll in it. And so if you imagine the stock graph going like that, that's why when one of these derivatives got knocked loose, it's like if the transmission like instead of just spinning like this like it should, it start like really fast, and then it starts like going like this and out of control, and that's what, and it broke off. That's what happened in GameStop 2021, and then like they put a Band-Aid on it, but it's like And if it does happen again, it's going to be worse. Or like if that's broken and abandoned, it's probably not powering something else right. So something else is going to break, and it just like that's how the whole market works, like a machine. Okay, so PE ratios, that's payment to earnings ratios. There was an anomaly. Like if you go look back in like 2014 to 2020, when like AMC and GameStop were being shorted before the event started. Um, their PE ratios, it's like their how much their company moves in revenue and how much they earn was good until one day it just dropped to zero and then just stayed zero for years. And once it dropped to zero, that's when the short positions went in because it dropped their earnings. So now the company looks bad. So it fundamentally makes sense to have a short, but it was predatorily done, not like done with integrity. That's where the problem started. So then now we're moving forward into revenue. So companies with bigger revenues are going to yield big market caps. You look at some of the higher revenue companies, like maybe Apple, for example. It's the largest company, which has achieved the largest market cap in history. But if you look, that company's stock price is like, it's done stock splits, but the price is both higher than GameStop and there's way more shares than GameStop. So like there's room for GameStop to grow in number of shares and price and still be just like completely going up. GameStop could dilute 10 times its float and probably still go up because probably more than 10 times its float illegally exists. And that's leverage GameStop has now. It's just they can't use it until the revenue is there. So now that they have $2 billion in cash, they have $2 billion of revenue leverage. But once they have like $50 billion in cash, they're gonna have $50 billion in revenue leverage. So it's like it's gonna be really good. Apple can just be Apple and big because they just like their revenue per year, like they'll make $50 billion and then they'll only pay their staff like 5% of it. It's crazy, but then no one deserves a raise, right? And it's so much crazy what happens after your company gets on this top level of the hierarchy. You like don't even have to follow the rules anymore. You don't have to care about the company anymore. Money just makes itself. But if you can't get it there, you'll never be there. So it's like that's the game. I don't think you can retire in the United States today in a healthy way without like $5 million. Because if you put that in a trust and get an 8% return, you'd be getting maybe like, if you got an annual return, that'd be like $300K a year. And then that would like, it would take like 12 years to make your $5 million back. And then you'd just be making $300K a year. But like, if you, what house's price is either going to be that high in that time, or they will have way collapsed. So it's like, what are we going to do? Are we going to move our money out of cash now, or are we going to like start a trust and just set up dividends? Or are we going to hold cash until? And it's like everyone's doing different strategies, and it's been a whole cash thing. But I think now that stocks are bottomed and what we're seeing in the meme stocks, it's time to put your cash in stocks now because cash, it's the end. Like we've been talking about cash end game for a while, but like they're about to have to print so much to fix it. It's over. We're gonna wake up like Venezuela, and I get into that later. But let me finish these market derivative metrics. So profits, that is strictly like after your revenues, you take your revenue if it's $100 and say you spent 50 to make that. So your revenue minus that 50 you spent, which is your input costs, will be your profit. So you profit $50 because you spent $50 to make $100. But if your revenue increase, your profits can increase, your input costs get lower. It's like that's how you'd manage a business. I don't know if I said in my intro. I've been a business manager for like 9 years at one company, but so like I have a lot of experience looking at consistent and growing numbers, but I can apply that to any other company now. That's how revenue and profits work. Code signals. Okay, so that is, I highlighted reg because up in international banks too. So that connects to a different thing later where, so this yellow one is important too. I do a lot of yellow linking later. Pay attention for yellow and red words. So if you go look at the map is one whole thing, you just look at all the yellow words real quick and be like, oh, that tells a whole story, just the yellow words. And like all the red words, because I've linked them together for a reason. But okay, code signals, that is where the like if a market maker is going to be like, oh, I'm going to sell 42K shares, for example, and then they'll do like an offer of 420, but like 1,000 times. But and that's 42,000, but it's not 42,000 in a trade. It's like a lot of trades of a specific number. And what they'll do is like go tell their insider buddies like, hey, 420 is a number, and keep your eye out for it on the sell volume, put options for this date. And then so as soon as they see 420 hit, all the hedge funds like dump at the same time or buy at the same time, and it's like code signals. They knew 420 was what they're waiting for. As soon as they see it, they move, and it's like hard to trace because they derivatized the amount. It was 42K, but now it's like 1,042 times. So it's like they don't even have to use full figure derivatives. They just fractionalize everything and like wherever they can fit it, and code signals. So we'll get into that more. Fundamentals, that's just like AMC's status. When you look at all of these, that's AMC's fundamentals. It's like where it sits, accounting for all of those things, all of those derivative metrics, and the company's outlook, including things like FOMO and stuff. So, last for this section, it's just the equation that's so important. A market cap. So you can do a market cap analysis with this and compare companies across sectors. If you just consider their revenue, how big is this company? Oh, $20 billion? Okay. Or $1 billion? Okay. Oh, just $100 million? Okay. But you get a scale of how big it is, and then look at share price times shares. So 100 shares times $100, the market cap would be $10,000 of that company, because 100 times 100 is 10K. But it's that math where we can plug in a lot of what we've learned. So like say the share price is $5 and the number of shares is 10. Well, the market cap should be $50. But what's going on in the meme stocks is the market cap is $50 and we're all like, hey, it should be more than that. Well, why? Well, the share price is $5. Fine. How many shares are there? Well, there's more than 5. So say there's 500, so now the market cap is 100 times larger than it should be, but it's reflected accurately as far as the equation looks, but it's actually not correct because they'll derivative leverage that number before they plug it into the equation. So if, say that there are only 5 shares, well, that means the price is wrong if we find a discrepancy of what a market cap is and what it should be. And same thing, if you find the discrepancy in shares, that means either price and or market cap is wrong. Or if you find the price discrepancy, that means the number of shares wrong or the market cap's wrong. And so that gets a little complicated as you like consider notional implications and fundamentals and stuff, and like broader market happenings, and then how one company might affect another. It's like, for example, like when 9/11 happened, that was like sad and it hurt the city, but it really hurt airline companies. But we'll get into that because airline companies is kind of like, there's a lot happening. You can look into Boeing stock. It's just got a lot of volatility for something that's been around for so long and is like the status quo of like the market for flying. But so we are hitting an hour and 54 minutes already. This is going to be a little bit longer of a movie, so I'm going to put a couple more parts. But I'm going to conclude part 1 here. So if you have any questions about anything I talked about, recent events, or this first part, you can go ahead and comment on it in the comments for this video. And then when I hit the rest of these topics in the other video, we'll talk about it there. But look forward to seeing you guys in the next video. Yeah, thanks for staying tuned with me. See y'all in the next one.